Mortgage rates were supposed to come down. Instead, they're rising. Here's why. Find out everything you should know about the mortgage rates. America's prospective homebuyers absorb harsh reality. Mortgage rates probably aren't coming down for a while. Why is this happening while Fed is lowering down the interest rates? Well, you should know that the Fed doesn't set mortgage rates. Wait. What? Did you not know that? Let me explain it to you in next 2 minutes. Stay tuned and watch the full video. Don't forget to hit that subscribe button and like this video so you never miss out on our latest updates. We put in a lot of time, energy, and effort in putting the information together so you can make informed decisions. Your support means the world to us, so please motivate us by clicking like and subscribe. You might expect that mortgage rates would be falling right now after the Federal Reserve cut interest rates by a half point last month. Instead, mortgage rates jumped higher. The latest data from Freddie Mac showed that the average 30-year mortgage rate had increased to 6.4%, more than a quarter point higher than it was 2 weeks ago. The news is probably an unwelcome surprise to the folks who had been hoping for lower interest rates to finally come off the sidelines and start shopping for a home. Here's what's going on, and what it means for those trying to buy a home now. Now let's talk about why the Fed doesn't set mortgage rates. But it's not just the 10-year Treasury yield influencing mortgage rates. The mortgage lender needs to cover its costs and make a profit, so it adds its own percentage on top, for example. And the specific mortgage rate that you get will depend on your own factors, like your credit score and the size and type of loan you're getting. That said, despite the recent uptick, mortgage rates are still more than a full point lower than they were this time last year, falling as investors anticipated the Fed's rate cuts and factored those into the 10-year Treasury yield. The lower mortgage rates compared to a year ago have been good for some homeowners. Lots of people have taken advantage to refinance their mortgages if they bought their homes in the last couple of years, when rates were higher. Where mortgage rates go from here? So where are mortgage rates headed? That's difficult to answer, since mortgage rates are affected by so many factors. But there's one thing that experts generally agree on. They likely won't go anywhere near the levels of a few years ago. In 2019, for example, rates for a 30-year fixed-rate mortgage ranged from about 3.75% to 4.5%, and they dropped to as low as 2.65% in early 2021 as the pandemic wore on. Many forecasts have rates near 6% at the end of this year, and falling to about 5.8% next year. I think the new normal is maybe 6% mortgage rate, says Lawrence Yun, the chief economist at the National Association of Realtors. If we are lucky, maybe we get a 5.5% mortgage rate. Or if we are unlucky, maybe the mortgage rate trends back up towards 7%. But Yun is confident one thing. The days of 3% and 4% mortgage rates are over, at least in his lifetime, he says. So what to do now? For homebuyers, the ever-shifting rate environment can foster uncertainty. Is it better to wait for mortgage rates to fall, or start looking now? Experts advise against trying to time the market, including when it comes to buying a home. That's for 2 reasons. First, if you buy a home and then mortgage rates do fall, you can refinance your mortgage and take advantage of the lower rate. But if you wait and rates go up, it just gets harder to afford a home. Second, home prices do tend to rise over time. Yun says that even people who bought homes at much higher mortgage rates, like 15% in the early 1980s, have typically had those purchases turn out well because of rising home values and the ability to refinance as rates fell. How's the housing market looking? There's some good news. Here's a positive development for buyers. There's more inventory now. The number of homes for sale in September was 6.4% higher than a month earlier and 33.6% above a year ago, according to a report from the brokerage RE/MAX, which looked at single-family homes in 52 markets. Meanwhile, the days a house stays on the market have been increasing, suggesting the market is getting a bit less competitive. I think there is more opportunity for buyers to get in there, says Sarah Briceño-Garish, a real estate agent at RE/MAX Unlimited in San Antonio. And there's another indicator showing fewer buyers to compete against, the number. Here's the thing. The Fed can influence mortgage rates, but it doesn't set them. Instead, mortgage rates mainly follow a different number, the yield on 10-year Treasury bonds. That yield has gone up recently for a number of reasons, including because investors are expecting the Fed to be a little more cautious in cutting rates after the jumbo-sized cut last month. I hope you find this information insightful, and now you know why the mortgage rates are still high even though the Fed lowered the interest rates multiple times in 2024. Thanks for tuning in. Don't forget to hit that subscribe button and like this video so you never miss out on our latest updates. See you in the next video.